Oh yeah. Watching crude oil put in some buying excess here. We were long already, looking to get re-long. We trade back above 56. We're gonna look at being long again. If you have any questions as we get started, go ahead and use the Q&A box. You can do that, or you may also just use, there's a chat as well, so we can use all of these ways to interact. And just for a bit of housekeeping and kind of how the schedule goes. So I mean, this live session, so there may be trades that we may take, or I may take throughout the session. I'll kind of look what I'm looking at thus far this morning, and then we'll talk briefly about we'll look at a concept that we're going to explore. We've been exploring as a community this week, and then we will open the floor to questions. So be thinking about questions that you want to ask, specifically around the profile and how we can help that be a win for you. So this time is for you to ask some questions, get some answers, and we love engaging with that. So let me just give you kind of a high level what I've been kind of tracking today, and what's been interesting. We had non-farm payrolls this morning, so we're kind of waiting to see how that played out. The number came in actually better than expected. They were expecting about 193,000 jobs. I think they added 205, so they're better than that. We also had a spike in Globex. We're looking at the NASDAQ here real quick. We had a spike in Globex on some news about potential Chinese, the trade stuff. You can see that the S&P's made a new high. They actually traded right up to the fairest price of the last 20 sessions and stopped. In fact, I can show you a chart where you can see this a little bit better. So you see this like 27, 26, 67, like this area right in here. It's not a coincidence that we kind of paused the upside up here and found there was prior buyers and sellers up there, and now we're rolling back over. If we closed above that this week, I would have said maybe the bottom was in for a while. But now that we're rotating back in, and if we even trade back to like 2,700 by the end of the day, then it's indecisive. We can continue lower next week. But the plan was to kind of wait to see how that played out. We prepare 4 plans every morning for products that we're looking to trade. So one is the bonds. Something just, hang on a second. Some alert just went off here. Oh yeah, crude is rolling now. So look at how crude made this just massive. Crude's been in this move, balance, move, balance, move, balance, move, balance, and we were expecting some balance today, but they wanted to scare everybody out first, right here. So right on new lows, brought in some selling volume, and noticed that they couldn't get any lower prices. Came right back to the scene of that spike, which was right back inside of the prior day range, and now we're squeezing to the upside. And if we get back above this area right in here, then watch for crude to just kind of take off. Yeah, they're goosing it now, baby. Absolutely goosing it. In fact, I need to get some of this.
I'm here, by the way.
Oh, awesome. Make sure I'm on the right product here. Okay, so we got that. Yeah, we've got, oh, I didn't realize that. So if crude can close above this 58 area, I'm looking for next week for us to clean up some of these uh, areas. If you're new to the profile, one of the things that we look at is structure, and you can see there are periods of time where we only traded those prices in one 30-minute period. So we call poor structure or rather impulsive, and are become targets later on. But so anyway, so we're looking for crude to kind of balance like what it's doing. So there's kind of smaller trades today as this market just kind of digests, although this looks like we're putting in a bottom, and the fact that they impulsively tried to trade lower and couldn't get any follow through. And then on the NASDAQ, which is our primary equity product that we look at, we have initial balance extension to the downside here at 69.82. We're into an area of volume. We're one time framing lower. We could see an engulfing day. If we do, we could eat into the gap. Let's see, from what was that? That was Thursday, show from Wednesday morning that we gapped up and could, it's not inconceivable that we could run to 67.71 this afternoon. So we'll kind of watch that. I'm kind of looking, I was interested early after we traded below 69.82. I was interested in joining the shorts if we could get to 70.30s. We couldn't get there. So I may be on the sideline there. And soybeans is the other product that we look at, which is had a massive day. They're at the top of a longer term bracket, and we're looking for soybeans to breathe as they are just kind of digesting a pretty massive move. You can see we took back several weeks of trade in one session, which really just took us back to the top of a range that we've been trading. So we'll see if we can close above that. If we close above that, that could pave the way to higher prices in soybeans next week. If not, then we could see soybeans rotate back again lower next week. That's kind of a brief idea of where we are. We did take one trade early on crude oil on this first push above the open and IB high. We were looking for 64, didn't quite get there, but we got some partials off halfway there, and then stopped. We came back through the entry, and looking to I'm participating again now from a swing perspective. So I'm getting some long crude with the low of the day as my risk, and but my target on this trade is up in this area, the 66.20 area. So quite a lot of opportunity for the risk offered. That being said, now that everybody's in, just a couple quick things. So obviously trading involves risk. You should be aware of the risk, have a trade plan, have a playbook of trades that you're looking to express around that. My name's Josh. So I'm the founder of Trade Profile. Been in the industry now for around 10 years. Both started on the retail side and then the institutional side. Along with me is JP, who's the other part of our team. Together, we're pushing 30 years participation in markets at primarily the more institutional side of that exposure. And today we're going to talk about who is in control. This is what we've been exploring this week as a community, is this idea of control. And each week, if you're not familiar, we are going through a pathway, a development process that we call our profile trading development pathway, which is really geared at trying to develop trading skill and consistency. And we do that by each week we focus on a different module. And so this week we've been focusing on what we call module 9, which is the IB extension as a measurement of OTF strength. Now I realize if you don't have much exposure to the profile, this all sounds like I have no idea what that is or why that even matters or what to do with that. So IB extension, so that means initial balance is what we see as the first hour of the highest volume of a product. And then extending past that means that price has traded past that range. And then we see that as a measurement of what we call other time frame trader strength, so OTF strength. Because it's really what we've been going after is this challenge. So like you want to align yourself with the traders who are controlling the auction. The challenge is who is that and how can I see them? right? So without being able to see that, you're just lost. You don't know. And what ends up happening is you can put a trade on against the controlling trader and then feel maximum pain fighting that trade. So this is really about minimizing your pain, spending more time in the flow of the market by realizing who's in control and joining them. So when we look at IB extension, extending past the range of that first hour, that gives us some insight into who is controlling and how strong he or she is, that confirms or negates the bias of the session. And then, the trader that plans for trades with respect to this behavior sets reasonable expectations for potential activity the remainder of the session. So you're building your approach based on what's likely to occur, having contingencies for things that are unlikely to occur, and in that sense that you win. So how that's expressed practically is one of the things that we look at is probabilities around range extension. And so we were early long on crude because so this is what we mean by the initial balance. So let me show you my pin tool here and how we can clearly see this. So this is the opening range. This is the first hour of trade. 80% of all trade takes place in this first hour. And we're looking for larger traders because they're the ones that are going to drive price. They're the ones going to move the order book, and we want to be with them. So when I see trade above this first hour, that's an indicator of an other time frame trader. And why we say other time frame is they just don't really care where value is today, and they're just buying. So that gives us an opportunity and insight into that. And so early on today, the buyers were in control, and then later in the day, we came back and extended to the downside. So that changed the bias to the sellers controlling the auction. And so then it puts us in a defensive stance to say, okay, this now changes to the sellers, but and how do they behave? Do they continue, or do they get trapped and reject? And then if we come back and take out the IB high, it flip back to the buyers, right? You can just play. You can see how you can play this dance over and over again. One of the reasons why this is helpful, we talk about this in subsequent modules, is that traversing back and forth across this range is rare. It's only about a 30% chance that once you've extended it in one direction, you'll extend it in the other direction. So the fact that we came back and took out the IB low today in crude after we took out the IB high was a statistical anomaly. If we'll come back and take out the high again, that also would be rare. And with each pass through, you're reducing the probability that you will pass again through the other extreme, which allows you to use that as a risk parameter, along with other confirming ideas. So like today, we can see sellers are controlling the equity auction, and the fact that we've established that IB range, and then we have participation below that range. In fact, we've moved the volume point of control down there. And so once that's the case, once you see who's in control, then you say, okay, well then if the sellers are controlling this auction in the NASDAQ, maybe I want to be long. Like maybe I missed the short and I want to be long. Okay, great. That's fine. Just realize, one, that it's not likely you're going to trade above 70.95 today. It's also probably not likely you're going to trade above the open. And if you're going to be long, you're going to look for some type of small responsive trade. It's counter to the prevailing trend of the day. However, if you want to join this trader, you're looking for rallies up, then you go, that say, as long as that doesn't negate this trader, I can then participate with them for further rotations lower, and it can be really effective. So in an oversimplistic way, I mean, we dive into that more. We've looked at that more this way because there's other things to confirm that around order flow and what we call the posture of the auction. But all things being equal, if you just look at IB extension, go back and look at prior charts and say, how many times do we extend in both directions? You'll find that doesn't occur very often. Most often, one of the opening hour extremes will hold the rest of the session. And think how you can start building trade ideas around that. And then based on how wide this is relative to its average behavior, as these products have average behaviors, that can give you an idea of how likely that range is to hold the auction or to see a significant extension. So for example, we've seen pretty decent extension past that range in crude oil today. Part of that is if you look right here, you can see that we average about 64 cents for the first hour in crude, and we've done 57 cents. So we had a below average initial balance range, which set the stage for, I mean, it got us excited when we took out IB high first, because we thought, oh man, we're going to see 64 and higher potentially today. And then they came and got more of that extension to the downside. So now we're in what's called neutral behavior today, which is fine. You extend it in both directions. Basically, it means that there's both buyers and sellers who are of other time frames who are active, and they're wrestling to see where the control is. That's a high level look at that. But just know that the thing to be mindful of is, hey, where is this first range, hours range, and where have we extended it? And I just, as a general rule, in whichever direction that we extend it, I say that's the trader that's controlling the auction. And I'm going to look to find positions to go with that trader, so that if there's IB high extension, I may be looking for pullbacks to join that trader. If I miss that, or there are no pullbacks, I may look to fade and trade against them, but I'm making sure that that trader has exhausted their control first. If they've not exhausted their control, then I could get max. That's where the max pain comes in from going against them. So that's just that's a quick overview of kind of where we've been this week and how you can use that IB extension, that IB range, to help you see who's in control. And we'll just open the floor to any other questions anybody might have.
Great stuff, Josh. The other thing, he talks about pain, and really that's what and I hate to say it boils down to that, but that's what people look for. Where's the pain trade? In other words, where's people stuck? That's what the profile does for us, is give us really good clues of where control is, of who's in control, and if it gets below certain areas or eats through certain areas, then people are going to be stuck. There's going to be pain there, and we could see movement based on stops, et cetera, et cetera. So any questions you guys have, anything specific? Doesn't have to be just about what Josh spoke about. It could be something that you have a specific question on away from that.
Yep. Yeah, so while you are thinking about your questions, so let's just say, for example, I missed being short NASDAQ, and I want to be long. Sellers in control. So, one idea that I have right now is I got point of control is right here. So fairest price is right at the 69.72. So that could be a cool target later in the day. So I might look to see, I got a decision level down here at 68.91. If we could trade down here and then, put in some higher highs, at least on a 5-minute, would more like them on a 30-minute, where I could, set the low of the day as my risk and then target. If I see some other buyers going with me, that's the responsive trade. But I know that, I'm just looking for a retest of value. I'm not looking for some, massive rally. That would be an unexpected behavior. Or and we're about to, go into lunch, if we could trade higher, like up towards the open, and leave the value down here, that would be an opportunity for me to join those in control for rotations lower later in the day. But that might also extend then, not in just today, but, subsequent periods, because we're going to go home likely with the buyers on their heels.
For sure, they're stuck. And the only way we're going to do that is obviously we're going to have to trade much, much higher today. So at this point, it's Friday, about 20 minutes before lunchtime on the East Coast. Yeah. And most likely rotation into this thing right now.
And I can tell you right now, that number right there, that 11,006, that is a massive delta between buyers and sellers that favors the sellers. I mean, big time selling taking place there. Somebody didn't like what was going on. Not at all. Not at all. All right, I got my Q&A window. I'm still mostly, I mean, I am interested a little bit in the potential for some responsive activity here in the NASDAQ just because we've got this zone of single prints up here. So if we do rotate, that could be a cool place to see the profile fill back in. Then let's, I want to look here real quick at the soybean chart because this is when I'm talking about this bracket that we've been in, you can kind of see we've just been in these price ranges, and now we're testing the top of that. So, you know, we're outside of this one. If we can accept, we get to here. And then really, if we can get above that, then the path is clear because I can tell you right now, if we go back and look at this big move, there's a spot here at 936. There's a really pretty good spot at 965. And goes from there. Yeah, and any products that anybody wants to take a look at and kind of talk through it, you know, aside the products that we've covered so far, that's always fair game. We enjoy that.
Crude, please. What do you want to know about crude, Stephen? Other than she's a finicky girlfriend. I call that. But let me tell you, crude is a great trade, but it moves. It's not. Can you look at gold? Yeah, I can. Let's talk gold, man. I love gold.
All right, let me pull up my gold chart here.
What do you want to look at, Michael? I mean, you have a specific question on that? Gold's been tough this year, man. Dollar's been ruling, and when the dollar's rallying, gold's not gonna do well. You know. Is it going to break out or what? Well, I hate to say this, we don't know until it does. That's hard to predict. I mean, it's tried to break out already, but they got rejected again. With crude, you know, we look at the profile. The profile is a great, you know, is a great example of, you know, a great tool to use, of course, to determine, you know, who's in control and where we go with it. But one, you know, we can't ignore a couple things like with gold is what's the dollar doing? Okay. If the dollar's rallying, I don't care what's happening, gold's not going to rally. It's not going to break out. So I guess let's look at Josh, go ahead and look at the larger picture if you don't mind.
Sure. So you want a long-term gold chart? Let's go to here you go.
Yeah, so we're trading above two large volume areas right now. The main one down at 1205 is the one we're watching. If we can hold that 1226, and we definitely have a chance to rally up higher, go up to the next volume node above where Josh just noted. Now, if we get above that, we do have, and I've been discussing this with the team here in the channel and on the weekend videos, is that if we get above that level, that about the 1260 area, we got a lot to clean up. See how thin that volume is up there above that 1260 area, all the way up into, Josh, what's that high node up there? It's about 1290 to the left. Look on the week or the monthly charts.
This one right here?
Yeah, exactly. About 1290 through
about 1295, somewhere in there.
Yeah. So that would be the ultimate target on that. So let's look at this. Is there a chance of a breakout? Yeah, there is a chance of a breakout. We know the levels that we want it to hold because we know then that the buyers can stay in control and they can hurt anybody who's short right now. And that's what we're looking at. Was just talking about the pain trade. But then we also have great targets. So our risk reward to the upside is really good right now. And for me personally, it's worth a shot if we can find the right entry on the deal. So to answer your question, is it going to break out? I can't answer that because I don't know what they're going to do. We could come in Monday morning and this thing's gapped down below 1200. We have no idea. Mm-hmm. But I will tell you right now, it's looking pretty positive to the upside as long as we can hold a couple levels.
Yep. Yeah, I'd affirm that. I mean, I look at the fact that, you know, here was gold bouncing. You can actually see where, you know, the monthly point of control was. So last month, is, right at this 1233 level, and they tried to test away from it and then came back. That's typically indicative of a market now that's going to try at least to attempt higher. Because what, the psychology of that is that the auction that tries to go lower and fails returns back to a prior area of value, then it typically is emboldened to trade in the opposite direction. Now, it almost have to get above this area where we rejected, before, to kind of break that gravitational pull. So you could see some chop here for a little bit, and it could be for a while. In fact, I was pointing some people to this fat cattle chart. Live cattle has been trading around 117 for better part of a month and a half. So there's a move coming. I just don't know which way it is. I mean, and you don't either. How about that? I don't know. You don't know. Nobody knows. We'll just kind of have to wait and see.
Yeah. So it, remember trading. A lot of trading is about waiting. We just had this discussion this week in the channel. It's not about trying to force your will on the market, because you can't do that, unfortunately. It's about being patient and waiting for the market to come to you, and whatever your setups are, or whatever your trade is, and that's the hard part about trading. It's mentally getting yourself to that level to allow you to not get in trouble, because people get in and they see the market swinging, they go, oh my gosh, I could have made 60 points on that, and then they start adding up in their head, oh my gosh, I could have been $1,000.
Mm-hmm.
It also could have been a monster loss for you too. so you really have to show some patience and wait for this kind of stuff. That to me is, if there's a secret in trading, man, that's got to be it. What about a possible double top on Dow and dollar? Look like double bottom on euro and Aussie dollar. Of course, gold is responding. Scott, I don't look at double tops and double bottoms, honestly. That doesn't mean it couldn't be. I mean, that's very likely. Let's look at, do you have the Dow up, Josh?
I can pull it up here. So there's the Dow.
A double top. Not sure I see the double top, I guess. The double top is when we're looking at either all-time highs or all-time lows, maybe.
Yeah, I might have to add.
Do you have a candle chart up by chance?
Candle charts.
We still use them from time to time.
And this is just looking at RTH.
Yeah, so the high is 26. Looks like this year's high is at 26,966. Double top.
Where's that double top that you're looking at?
Yeah, I'm not sure where you're looking at on that, so I don't see that. Do you have can you pull the dollar up?
Yeah, I think I do it on a different chart though.
Oh, that's right.
Because it's on the ice.
The ice, baby.
Let's see.
Steve.
So there's where I can see a double top in the dollar.
Yeah, they poked it up. Okay, so this is a great example. Let's look at that. So what they did on this, and now we don't know, where they're going to go with this, but so they poked it up above that recent high, and so what did they do by that? They got people stuck. Okay, so late longs got stuck in there, and they punished them. Okay, with that big sell-off. Now the question is, will they reload and go out and take those highs out again, or will they just start to consolidate down here and then make another leg into the 95 area? Okay, that's the question that remains. So at this point, is it a double top? Yeah, at this point it is, but we don't know if they're going to run back up and take out those highs. So how could you trade something like this? Well, if we consolidate here and we don't take out those recent highs, like 97 up there, then that suggests, okay, another move to the downside. So maybe we have a short-term top here, possibly. And believe me, we do not call tops and bottoms. That's just not what we're into. So you could establish risk based on the acceptance down below the highs here, and then establish your risk and take the trade to the short side if you feel that's where it's going to go. Other people will say, oh, this is just a pullback, and then they'll try to establish risk to the long side. So who's right? I don't know. We'll have to find out when it trades. So I mean, it's a good question. I don't see the Dow side of it, but I see what you're talking about on the dollar. Do you have anything to add on that, Josh?
I mean, I would just, if I was, and these are always incumbent on the time frame that you trade. So if this is a daily chart, so if I was looking to kind of, write my plan, and we are always thinking about, like, what's our plan, and how do we express risk around some of that stuff. And hang on one second, I need to check in order here. But if I'm looking at a expectation for this auction, so I see the dollar moving higher, and then a rejection back lower, back to prior areas of volume. So you can see I have 2 months here. These are monthly bars. 2 months where we had the same agreement of price in this auction. The auction came back to that. That shuts off the upward auction and says now we're going to kind of balance instead of range. So this activity was really just continue confirmation of this range. So I'd be looking at it to play the edges of the range to do kind of exactly what it's doing, is to to be short the dollar back towards this level and this level as a target. And then really, unless we could close outside of above or below this range, you could see the dollar just kind of trade sideways for a bit.
Yeah. No, no need to apologize, Scott. I'm not sure you apologize. It's a great question. I mean, just we didn't understand it. So Steven says crude oil value area low at 26. Oh, let's check that out.
Yeah. So we've had questions about this before about value area and how relevant that is to trade. We really don't key off of that very much, to be quite honest. Haven't found a lot of value in looking at the value area. I mean, we do look at areas of high concentrations of volume, which, if you look at the crude today, we're kind of in the middle of it. It's actually tighter than actually the value area itself, but there's kind of an area in here of, higher intensity, which, we're after we went lower, we went, and now we're, holding this area. So, the longer we hold this, the higher probability then we're going to, keep moving on higher. One of the questions, and this is a really good question, had to do with explaining the market profile framework and how it expresses market participants and structures. So, and this is I don't want to say it's a myth, but it's a common misconception around the idea of profiling. So this graphic that you can see over here, that they look like they're just letters, and I've got one here in the middle. So this is what we talk about when we talk about the market profile graphic. That's a market profile graphic that Pete Stottlemyre and others developed at the Chicago Board of Trade. This histogram here is what you call a volume profile. So market profile, volume profile. Okay, and we use both. Now some will say, well, yeah, I don't need a market profile. I can just use the volume profile because there are certain behaviors you can expect on how a volume profile behaves that are different than the market profile graphic alone, and that's fine. Why we use this in conjunction is because, and it has to do with this idea of control. So on a volume profile histogram by itself, I cannot discern where someone is extending the range and or where they're creating impulsive structures. So like if I go back and let me turn this off, and I go back here and look at these zones of single prints in crude's auction yesterday, that's pretty impulsive, and I'm gonna expect at some point that if we can get some loft, that we're gonna trade back through and clean some of that stuff up. So I can't really discern that. I mean, I can discern that there's a hole in the volume profile here, but in terms of when might that happen and when could I expect that to occur, it's kind of hard to know that except by using the market profile graphic and going, like right now, it's probably not likely we're going to go get that today, given the fact that the last time we passed through the IB, we did it to the downside. However, if we do come back and take out and trade above 56, that could pave the way for a late session spike that could trade up to these. And I'm kind of watching that. So, like I got some crude long in the low of the day, and I'm leaning against this buying excess down here. But if we get back above here, I may add and get more aggressive for a late push today, up into the 64 and higher. So we use them in conjunction. I always tell people that the market profile helps you know who's in control. The volume profile helps you identify areas of interest where you're looking for that control to be expressed. So, if I've got, like in this environment, we were really excited earlier because we had an area in our plan, this zone right in here, that was on the volume profile, an area of acceptance because we have both buyers and sellers participating there. We were looking for, where would we extend the IB relative to that? So where would would there be buyers or sellers showing up relative to that? Well, buyers showed up early, so that was exciting. And we knew we were wrong. That's the thing. When do we know that we were wrong? We knew that we were wrong when we came back and took out the IB low, which was really great. So having that clarity of when you're wrong too is so helpful, and the profile helps you see that with pretty great clarity. And zipping over here to the NASDAQ because we got a higher high in F period here. We're trading above, and I'm kind of looking to see if I can get a triggered long because we do have these singles up here up to the 70-20, and that could be an opportunity to be long, for trade up through that. So the target would be to get up to the 70-27, and then maybe rotate later. If I don't want to take the long, I could just say, hey, there's a decent chance we're going to get that move because of the poor structure, and then I could reestablish shorts in the, kind of up here in this 25, 29, 30 area. We'll see. See what the order flow looks like. Have a little bit of a buying spike right here. Not too big on the volume, but definitely some impulsive buyers, which could have just been taking the pressure off the sell side. But if they get another higher high on a 5-minute, that could give them some juice to move higher. So it looks, unless we get a late spike higher, it looks like we're going to get a neutral center day in crude, which means that we'll have to resolve that directionally next week. Beans have not traded outside of their opening range. So in terms of who, like after, and this often happens after a massive day, you can see that beans have not exceeded that first hour's range. So really, there's just day traders that are in control here. Really, nobody's wanting to step out and say, yeah, I'll take that bet. Okay, so we got that question. Pretty big delta to the sell side on the NASDAQ, man. That's a big number. Same with the ES. Yeah, and here's the sellers. They're pushing lower again. Come back, test this little volume area. This could be the thing that to get below 55, they could really push it, make another run for new lows. We will see. Okay, question was, how long typically are you guys generally in on a trade? So That's a great question. It depends on what trade in our playbook is in play, and if it's a swing trade, I mean um, that could be days. If it is typically if it's a day trade, I mean they're coming good 10, 15 minutes, something like that. We like very much to build our playbook of trades in such a way that we are not taking on much heat for very long. So we will typically try to get in the trade and then quickly establish risk around that. And oh, that's fun. Yeah, not if it's not a swing trade, and we define those. We'll say, hey, this is a swing trade or this is not a swing trade. But typically, we're going into profit pretty quick and then putting stops in. There are two metrics that we like to look at. One is called a max favorable excursion, and one's a max adverse excursion. Because one of the things that in an assessment of how you're doing as a trader, with respect to, are you typically taking trades in the flow of the market? Are you taking unnecessary risk and heat in your trades? So if you find that when you go back and you look at your trades and you spent most of the time with the trade against you, then your playbook needs some work. It's not very effective. You should not be spending as much time, and it can be really simple. So I'll just kind of show you one that we kind of track as a community. Is and we're not a call trade service, but we do call trades from a demonstration standpoint, just so that we can kind of see. So here, I need to update a couple trades this week yet, but like what was the time that we got in the trade? What was how much did the trade go for you, or how much did the trade go against you? So you can see we really don't like them to go against us very long. And typically, like wherever that initial stop was, like here, this one even stopped, way above where our initial stop was. So we like to put on a trade, know where the stop is, know what trade it is. So, like all of our trades, they have a name. Like, okay, that's an IB extension go with, that's an IB extension fade, that's a posture swing, that's a structure cleanup, that's, that's a second move IB, that, so that if you know what the trade is, you kind of have the expectation for how long I should be in the trade. But yeah, it's a great question. And I would say, like we're not oh sweet. We're not a scalp. Like I'm not a scalper. I look for intraday swings. So I typically want to find a couple things around trades I look for, depending on what setup it is. Typically, always try to express them in at least a 3-to-1 reward for risk. So if I can, so for example, like let's say we wanted to target an intraday trade back up. Here. So I wanted to get back. My target was to clean these singles at 70.28. We're trading 69.70 right now. So let's say that I entered right now, and my stop was I don't want to make a new 30-minute low, and I say I entered right here. Okay, so you can see that that's a pretty favorable reward for the risk on that trade. And this would actually be what I would call an IB extension fade trade. So that IB has been extended to the downside, and I'm looking to fade that back into the range. And if after in the next 45 minutes, if we're trading close to the IB range, I may take that trade. But yeah, good question. Excellent, 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 excellent. We got some buyers coming in here. They're just, but you can see sellers just owning this day. Look on this screen. So this is a cumulative of, at each price, was it primarily sellers or buyers? It's all been sellers. It's all been sellers. So be long at your peril. That's what I would say. That being said, that's what could lead to a decent rally this afternoon, is that if we have all of this selling and can't get lower prices, then those sellers are likely to cover, which will lead to higher prices. Yeah, you can see real easily that hole right there. I think they might try to go get that hole. So I'm gonna just hide this for a second. Let's go back and look at our total neutral day. Got a couple hours left in crude. Pretty neutral order flow in the session. So not I like the fact. In fact, if you look at let's go here and merge. I'm gonna turn off the Globex. Let's just merge. You kind of see a couple different zones. We're trading right here. If we could close back above here, or we get above that next week, then I'm looking for crude to trade into this area. So that's the opportunity, is to trade up towards 65 ultimately. And that's the swing trade that I want. I want to get up to there, and I'd also like to get this node up here. The auction's continuous, so merging, looking at multiple sessions together can kind of give you a picture of where the auction's been. And give you a framework of, it may look like a lot of volume today, but it's really not. It's, in the broad scheme of things, it's not much. Soybeans just hanging around. Bonds trending lower. So I think that's the resumption of the higher interest rate trade coming on here. Let's take a look at so pretty above volume, almost double. Is that right? No, not quite double. But they're almost, bonds are almost to the target. There were two kind of prices that we were looking for after non-farm payrolls. One was here, and the other one was here. So we had started this thing in a balance area, and then it was either going to go this way or this way. And so we're seeing which way it's going. It's going to the downside. So that for today is not so helpful, but what it does mean is that next week we'll look for tests that come up to this area that fail to join shorts for further exploration lower. The question was, do you try to concentrate your trades in the morning session in the equities, or in other words, do you have a setup like in the afternoon? So yeah, so typically that's a great question. Typically we're looking for um, more fading the market. So, if we make sure that the player that's in control has exhausted themselves, we may look to counter them as the auction kind of trades back the other way. And that those often show up in the afternoon, the fades. Typically in the morning, we're looking to go with the auction, and in the afternoon, we're often looking to fade it. Sometimes the fade comes in before we get to the afternoon, and typically that's when that first hour is just super wide. Like if we put in a super big range in the first hour, then we're looking to counter that typically more often in the before lunch. But so crude might be trying to make another. Do you consider anything after the bond market closes, like for the bonds themselves, or like looking for any trades? Sure. Yeah. I mean, if opportunity's there, yeah, absolutely. But typically at that time, like 3 p.m. Eastern, you're getting, like in the last hour. So typically the only trade that I find myself doing there is what I'd call a end of day counter trend fade trade. So like if the day was a trend day, so trending behavior typically, let's draw this so trend day, classic trend day, you open and have an extreme and you close, and your highs in the last hour, your lows in the first hour. And at the, if we were trending all day, at the end of the day, you're going to see like a little counter trend, profit taking thing that can happen. That can actually be a pretty high probability fade trade that you can take that happens in the last hour. It's about the only trade that I find myself taking to initiate a trade in post 3 p.m. Eastern. Now I may be exiting a trade, but that's because I was in it. I was already in it before. But that's about the only trade that I would look for in that last hour. I do find that I typically like to find, kind of a sweet spot for me. And this is one of the modules of our pathway. We talk about time frames of the session, and micro sessions inside the day when you look for a trade. Like right now, I'm gonna tell you right now, right now is not a great time of the day to look for a trade. One, it's Friday. So we're coming into lunch. Volumes are gonna tail off through the rest of the day. So I'll get off this call, and unless it's a swing position, I'm not looking for any day trades. But from about 10:30 to noon Eastern is a time that I'm most active, and then may come back and look kind of 1 to 2:30 Eastern as well, and then but that's pretty much it. And there's all kinds of rationale around that between volume, probabilities that a product will make a new high or new low during those times, and whether that high or low that's made ends up being the high or low of the day. I mean, you can track all that kind of stuff. Well, look at beans. They might get a new high yet today, at least in the RTH. Doing so with negative order flow, though. Man, is crude going to make another attempt lower? Back outside of they're back outside. They are getting short at poor prices, and the fact that you can see that the profile is going like this. So unless we actually come out and take out that low, I mean that would tell me my swing ain't working. That would definitely tell me my swing is not working. Which is why that's where my risk is. Hmm. All right, again, we got about 5 minutes here. So anything else that you'd like to ask before we jump off? And we post the recording these calls on our website. We'll also send you the link. Trying to do a better job of that. We've been getting that after the call, and would like to do that and have it to you this weekend so you can review it if you'd like. But next week we're going to be talking about constructing, or well, at least in our community, we're going to be talking about constructing and monitoring a bias with the profile. How to know, kind of intraday, who, kind of follow on of this week. How do you know who that is? How do you even establish one coming into the session? And then how do you monitor that and know when that's being challenged? If you have any questions or want to explore more, if you've not been I know a lot of you have been part of our free course. You already know how to trade, which is just 9 email lessons that really kind of help you take what you already know about markets and auctions and how they behave and translate that into trading knowledge. I firmly believe that most people know more about markets than they think they do. It's just like when you look at a chart, you just don't know how to translate that competency into actionable information. And if you're brand new to trading and everything that we talked about today was just complete Greek and you're like, I don't even know what to do with that, I would commend you to our Build a Profile course, which is a 12-module video course. It's self-study. It kind of covers cradle to grave. Are you a trader? Are you an investor? What are 4 behaviors present in every auction? What are 4 questions to answer before you put on a trade? What is a stock? What is an option? What is a future? What is Forex? What is profiling at a really basic level? How do we use that? How do you start testing trading? So like if you're looking to get started with trading and feel like you're a little in over your head at the moment, start there. That will lead you up to kind of where a lot of us are doing work is with our development pathway. So if you've been around markets for a while, still struggling with consistency, are intrigued by the idea of these profiling tools and what they allow you to see that nobody else can see, then do a free week with us. You'll get one of our modules. You'll be on a couple live calls. You'll see trades that we're calling. You'll get recordings of all of that, and that's kind of our offer to you to help move you towards that consistency and see the value of what we're doing. And then if that doesn't work for you, we'll part ways, and it's all good. And but a lot of people experience it and go, yeah, this is for me. So if you're on Twitter, follow and interact with us on Trade with Prof, and we're also on Facebook. You can search for Trade with Profile, and you can always send an email to team@Trade with Profile or give us a call. And we don't answer that during market hours, but just leave us a message and we'll get back to you after the close. But that's kind of where we are today.
Yeah, guys, I'll just say one thing here before we wrap it up here. Just this, I don't know how. Real quick, just a quick poll. How long have most of you guys been trading or have been in the trading arena? Can you just quickly answer? This is one of my favorites here. 2 years, okay. Anybody else? 10. Oh, nice, nice. And for the 10-year or 6 years, so again, I ask this for the person who said 10 years, are you consistently profitable at this point, or where are you at? And I'm not going to drag this call out. I'm just, no, okay. All right, so guys, Josh and I probably have 30 some years together, well, over 30 years. That's a long time. We've been trading for quite some time. And I will tell you the first multiple of years, Josh, I don't know how many years it took you, but it took me about probably 5 years to really become really good and consistent, right? You got to stick with it. You got to, what we offer and what, Trade with Profile is and what market profile is a tool. Okay, the key to the tool is one, controlling what you do. Okay, the thing that you can control is your risk. All right. And then you have to control your risk and manage your risk by what your trade plan is. And I'm going to, people in our Slack channel hear me say this all the time, and Josh says this as well, is that you got to have a trade plan. The gentleman who said that, been trading for 10 years and not consistently profitable, I would probably ask you right away, do you have a trade plan? If you do, I'd like to see it and see what it entails. Start slow. We watched this video, Josh. What was his name? Was it Michael yesterday? Michael.
Yeah, Rob shared that. It was great.
Yeah. So talk about incremental improvements. And first thing you need to do is you need to have a plan. What's your plan? What's your trade? What does that look like? Are you a breakout trader? Are you a pullback trader? Are you, what is your plan? Identify that, test it, become confident in it. And then from that point, make incremental changes and continue to build towards managing that risk. Because you're going to have losses, and that's just part of trading. That's the hardest part of trading. But you're going to have losses. But once you understand those losses are small and they pale in comparison to what the larger upside is, then it becomes a whole different ball game on that. And Profile helps us do that. The Pathways course helps us understand a lot about Profile and maybe some of the opportunities in there and how people can build their trade plans around that kind of stuff. So I implore you, I beg you, any other vocabulary we can use to describe, get a trade plan and be consistent with it, because that will lead to consistent profits down the road, and get incrementally better. Don't try to go from one contract to 20 contracts and make it work. That's a recipe for disaster. But do the right things, stick with it. You can do it. People do it. We're living proof of it. There's a lot more than just us out there that are making livings doing this. So and again, reach out to us if you have questions. We'll be back here again next Friday. Most Fridays, right?
Yep, most Fridays. Yep.
Except on holidays, of course.
Yep.
And then bring questions, pick our brains. We'd love to help you any way we possibly can.
Yeah. And if I will say that affirm what Jed's saying about having a trade plan, and I would tell you it's and it may be like this. You're like, I don't know what a trade plan is, and that's okay. Totally okay to say that you don't know what that is. That's part of why we encourage you to spend a week with us, because what we're going to do is you're going to see our trade plan every day. You're going to see our trade plan you're going to see what a trade plan looks like and feels like. Not to say that you have to do your plan like we do it. That we're trying to lead you towards developing a plan that works for you. And you may find that, hey, your plan doesn't have to be as complex as ours, and that's awesome. The plan that I use now and the format that I go through, it's something that I've honed over the years, and it works for me. And it's been refined to be the data that I find relevant in making decisions. You may find that you need less, and that is okay. That's not deficient in any way. In fact, the more simple it is, the better. But there is it's almost like you're carving out and saying, okay, here's what I know about where this auction is. Here's what I know is likely to occur based on where this auction is. So if this happens, then I will do X. And if this happens, then I will do Y. Like that at a very basic level is what a trade plan is.
Yeah, it's an if-then statement.
It's an if-then statement, because we have no idea. We have, based on auction behavior, we have likely we know what's going to happen. I can tell you that based on how the Nasdaq's trading right now today, if we continue to you hear it, if we continue to hold the 96.66 area, then we're likely to press on lower into the afternoon towards 68.93 and lower.
Perfect. And just like we said in gold, if that area were to hold, then we most likely have a chance that we would then go up and test levels above that, especially if the dollar breaks down even further. So it's an if-then statement, guys. And simple is best. Believe me, keep it simple. Yeah, and go back, and I challenge you, and just maybe give you some homework. Go back and try to find the best traders that you know or that you're aware of. I can list probably 6 of them, 7 of them that are just have made millions and millions of dollars. Okay, and here's what I know, and I've spent some time on the desk in my past, and I know guys that have made millions of dollars, and I will tell you that the one consistent factor with all of those guys wasn't that, you know, somebody's using profile and somebody's using, you know, this or that or whatever. Their styles were all different, but here's the one key consistent was they were trading the same setups and their same plan for like 15, 20 years. They didn't deviate from it. And it was all based on price and volume, by the way, too. Just so happens to be. So
last thing we'll say, we'll let you guys go and get on to your weekend is, and I'll make sure that there aren't any questions I haven't answered real quick. I see one. I see, Tony, I see your question. I'll answer that. So part of the if then statement or why we expect the auction to do certain things is because the auction does consistently predictable behaviors. So and that's why, you know, when we go through the modules in our pathway, we're helping you learn how to read that behavior. So then as you're building your plan on, like this is the next logical behavior that's going to happen as a result of, you know, where the auction has been. So those things married together leads towards consistency.
And when Josh says they do the same things, because remember, this is about behavior. And I know people talk about algorithms. Oh, what about the algorithms? You know, the computers are taking over. My question is, who programs the computers?
That's right.
People.
All
right. And there's not too many different. We're breaking new lows on the indexes.
I love it.
So yeah, listen, there's only a few different types of trades out there in the world, and there's only so many different types of funky things that you can program, and everything is going to be based off a couple different things, right? Price and volume. So there you go.
All right, last question we'll answer. So Tony said, do you look at intermarket relationships? So when I think about that, Tony, I think about correlations between products, i.e., what that would be a highly correlated market. If I looked at treasuries and equities, right? I might look at those because they can often trade at inverse to each other. You know, specifically, I was looking at the S&Ps versus the bonds or the notes. They're pretty tightly correlated. That's actually one of the reasons why I choose products that I choose. I actually choose products that are not correlated because I don't like the correlated trade because it basically means it's like, you know, it's like one thing. So I know that could be an effective way and approach. And if that's what you build your system around and that's what you hone and you know how to discern when those correlations are breaking down, then it can be very effective. So, you know, if you've explored that, you know, want to build a trade plan around correlated markets or the relationships between them can be extremely powerful. The key thing that I would say is know when those correlations aren't working. Because if you're building it around when they do and they start to diverge, then you're going to be in trouble and you're going to go, what's going on? What's wrong? Why is this not working? And it's nothing's really wrong. It's just that you're in a different cycle of the market and the correlations are not correlated. One that I've often looked at is Canadian dollar and crude oil because of crude's, WTI's relationship and influence on Canadian currency. So, and they often track together. So when you see those, trading separately, in fact, that's a way that you can express interest in crude oil in non-dollar terms by using Canadian dollar. But sometimes that correlation doesn't work, for whatever reason.
Yeah, that's a great question, by the way, and it's valid, and a lot of people do. It was really, Tony. It was really popular in the pits. Because the reason it was popular, and for those of you who don't understand correlations, they would watch one market, and if one market did this, the other market should do the other thing, right? And so what they do is they stand on the edge of the pits, and they look into other pits. So let's say you're in the bond pit looking over at the ES pit, right? So they see a rally happening in the ES. Well, at that point, they would expect money to be going out of bonds. So they would sell the bonds by the ES. It was a spread trade type of deal. So that's how correlations came about. Like Josh said, just understand when they're not working. So.
Yeah, it's kind of hard now because you can't look over at the other pit.
No, it's not.
You can't go over there and go, oh, they're selling it, get in it.
Yeah, well, they'd sit down the edges of the pit and just watch them. I mean, the ES and the bond pit were pretty close to it's the old one. At the old days, were fairly close to each other, so they could look into each other's pits and figure out what was going on. So, not that way any longer.
That way anymore.
Guys, great questions. Bring them. We love them. Anything we can do to direct you, get you more consistently profitable. Of course, if you want to hang out with us, we'd love that as well. We have a great group over there. Our job is to, provide you knowledge and the tools necessary to get it done, so you don't always have to rely on somebody down the road.
That's right. All right, everyone, have a great weekend. We'll see you next week. Be looking for the recording. I'll endeavor to get that done this afternoon, if at all possible. But it is also a beautiful day in northern Colorado, and I'd like to go outside. So
get on that bike and go.
Maybe this evening.
All right, guys, take care. Have a great weekend.
Yeah.